Okay, so this might look a bit confusing. Especially if you're a beginner, but do not freak out. Watch this video till the end, because in a second bit of this video, I'm going to give you an example. And we're going to go into our charts and see how the system actually works. Okay, so one of the most important thing when it comes to trading and winning long term is how much money you're willing to risk assets per trade. So in our particular example, we have an account size of $1,000. And our risk per asset is 2% or $20. So depending on your risk tolerance, say you determine how much money you're willing to risk. Most of the traders will use 2%, some traders will use more than 5%. It totally depends on you. But it's best said to not risk more than 2% of your account, as you are likely to panic when things don't go your way. I mean, we all know no one loves to lose money on trade, right? Okay, so for example, you have a signal from your indicators to enter a long position on pounds United States dollars. So what you want to do, you want to open 2 trades at the same time and risk 1% of your account on each trade. So, next thing you want to do is, you want to set stop losses on both of these trades. So both trades have stop losses 1.5 value of the ATR. ATR is an indicator that shows the volatility of the market. So based on this indicator, we determine our stop loss and take profit targets. So next thing what we want to do is to set our take profit level on our first trade. And our take profit levels is going to be 1.5 times the risk. And here comes that tricky part. This trade right here, you see that these trades are pretty much the same. But the only difference is that on the second trade we do not set our take profit level. And here's where we can make a lot of money. Because the number one rule when it comes to trading is to let your winners run and to cut your losses as soon as possible. And this is something we want to do. We want to set our stop loss at 1.5 value of the ATR and a take profit level at 1.5 times the risk. Okay, the trailing stop loss for example. You entered the trade and the price went in your direction. It hit your take profit level on your first trade and the trade is automatically closed. So now you have the second trade running. And here are the steps you want to take in order to secure that profits. So the first thing you want to do is to move the stop loss to the entry price to eliminate losses. At this point you literally playing with your profits and you secured all the possible losses. Second thing you want to do is to set a trailing stop loss of 1.5 value of the ATR so that the distance between your price and the stop loss is always 1.5 value of the ATR. Now why we use 1.5 value of the ATR is because the ATR tells us what range the last 14 candlestick has traded on. So it would help us avoid getting stopped out easily. Now the third thing you want to do is to use an exit indicator to maximize your profits. If you have no idea what I'm talking about, don't worry much. Let's move on to our charts and I'm going to show you a practical example on how to use this money management system. Okay, so we're currently looking at the pounds United States dollars 1 hour chart. And let me introduce you to these indicators. So the first main confirmation indicator on our chart is this Hull moving average. So what this indicator does is, you see when there is a red line, we are on a bearish trend, but when we see a green line, we are in a bullish trend. And as you can see that the chart have different bar colors. Well, our main indicator is a price action based indicator. It has a lot of settings, but it was filtered this way. Let me show you what we had to remove from this indicator. Okay, this is our indicator panel. As we head over to the style, we can see we untick the signal moving average. But we still have our Hull moving average present. We also got rid of the swing high and swing low, as it shows support and resistance levels on the chart. This is the reason why our chart is on different color. We only changed the color 2 and 3 to orange and blue for better visualization, and we then got rid of most of its setting, as they mostly show inside bars and other type of bars. So back to the chart. Now what this different color on the chart does is that it shows what's going on in the market. As we can see that a green candlestick shows a bullish trend, while the red candlestick shows a bearish trend. Now for the orange and blue candlestick, when it's colored in orange, it shows that there is price retracement in the ongoing bullish trend, or possible reversal towards a new trend. And same applies to the blue candlestick, except that they show a retracement in a bearish trend or a possible reversal towards a new trend. As we can see here on the chart, the price was bullish at this point. And we saw the orange color which led to a trend reversal as we see here. And also on the bearish trend, we could see the blue candlesticks that shows when price is retracing in an ongoing bearish trend before it led to change in trend direction. Okay, that's all I would say for now. I hope you understand how the indicator works. So let's move on to the main aim of this video. Okay, our next indicator is this ATR indicator, ATR average true range. And here are the settings. 14. So what this indicator does, it determines the overall volatility of the market. So what we want to do right now is before entering a trade, we want to identify our trade entries. So we see that price closed below the HMA and we got our first red candlestick here. So this is an entry to enter a short position right here. So now, what we want to do is we want to take a look at that ATR indicator and see what is the actual value of the ATR. So it's 216. 216 means that the price could move 216 pips in any given direction within one candlestick. So now we know the trade entry and the value of the ATR. So what we want to do right now before entering those trades is we want to add another indicator to our charts. That's going to be a chandelier stop. We are going to use this indicator to exit the trade. So the way this indicator works, whenever you see the moving average colored in purple, it shows a trailing stop for a bearish trend, and when we see it in mint green, it shows a bullish trailing stop. Now this is where it gets easy. If you are still watching, then consider yourself lucky, as I'm going to show you the best part of this indicator. This indicator mainly uses the ATR to measure its moving average, as we will be going through the stress of recalculating the value of the ATR whenever a noticeable change in price occur, as it would be of much stress and we wouldn't want that while trading. Now this is what I want you to do, change the values of this chandelier. As we bring up the setting panel, we could see that its default settings are a bit high. So we would be adjusting this setting to better get the most from the market. Now change the look back period to 14 and the ATR period to 14 as well. Also change the to ATR multiplier to 2. I know that initially I said we would be using 1.5 times the value of the ATR, but this indicator does not work with decimal values. And overall, this is not bad, as the 2 ATR would let us stay in the trend and avoid tricky movements that the market plays sometimes. Now listen carefully as I reveal how professional traders work with this indicator, as it is often a mistake newbies do when they first try out this indicator as an exit indicator. Okay, now, let me zoom this closely so you would better understand my point. The best way to use this indicator is not by changing the values of your stop loss on every dot it shows. The best way to use it is by only changing the value of your stop loss when there is a noticeable change on the indicator. So if we just, for example, took that short right here, what we want to do is we want to enter 2 trades and set our stop losses at 1.5 times the value of the ATR, which in our case is going to be 324. So 324 plus the point of entry would give us 22,718. And that is our point of stop loss. And as we said, the take profit is 5 times the risk. Since our risk is 324, then our take profit value is 486. Therefore 486 minus the point of entry would give us 1.21908. And that is the point in which our first trade had its profit. As price went in our favor and hit the take profit level of our first trade, we now have that profit secured, as we won't be losing it anymore. Next thing we want to do is, we want to adjust the stop loss on our second trade. So we want to bring the stop loss all the way down to the price where we entered the trade. So now we literally playing with our profits. And if the price were about to move against us and hit our stop loss, we still would have that profit that we had from our first trade. So now, we begin to trail our stop loss, and like I said, we don't adjust on every change in the chandelier indicator. What we will be doing is, as we look at the chart, we would wait on the next major move in chandelier before we adjust our stop loss. So we got our first major move at this point after the take profit has been hit. We would adjust our stop loss to the previous major change in chandelier, which is right here, as it lets us give price enough breathing space while it retraces. And when another major move on the chandelier occurs, we would adjust the stop loss to the next major move from our point of previous stop loss, as we see here. Now why we adjust this way is because, most often, price tend to retrace at the points of moving averages before continuation on its trend direction, as we could see that it hit both the chandelier and Hull moving average during the retracement. So if you make the mistake of changing to every point the chandelier gives, you would have been stopped out of this trade. If you have never used this as an exit indicator, please avoid making such mistakes. And this is where we close the trade, as our exit indicator gave us a signal to exit the trade. So the idea here is to find an exit indicator that would get you out of this trade before the price actually hits your stop loss, so that you maximize your profits basically. So we can see that we closed the trade there. And here was the overall profit that we made on a second trade, which was 5 times the initial risk and almost 2 times the previous profit secured. Alright guys, I hope you find this video useful, and if you did, then smash the like button as it helps me a lot to make more of these videos. Thank you and see you in the next video.